Hey everyone, this is Dimitri Pragmatic with MarketChameleon.com. In this video, I wanted to talk about iron butterflies and how to use a scanner to narrow down iron butterflies that offer the most profit potential. So before we get into the scanner, I wanted to just show one example of what an iron butterfly looks like. And I'm going to use Apple here as an example, and I went to the Apple options chain. I'm going to go and set up an iron butterfly and run a payout diagram at expiration so you have a visual, and then we're going to go to the scanner. And the idea behind an iron butterfly is this. We're going to be selling an out of the money put spread, and that for credit. We're also going to be selling an out of the money call spread for credit, and the objective is that the stock sits within a certain range at expiration that we will be able to maximize and collect and profit from the credit that we received. So let's look at Apple right now. That the money is around 270, and let's start out by selling an out of the money call spread. And I'm just going to choose these strikes over here. I'm going to go down $5. I'm going to sell that put, the 265 put, and then I'm going to buy the 260 put. That's a $5 credit put spread. And I'm going to do the same thing in the call spread. And over here right now, you see here, this is selling the put spread. Now let's do the call spread. I'm going to go up $5. Same thing, I'm going to sell the 275 call, and I'm going to buy the 280 call over here. Now we have all four legs. You see here, it's selling the 265, 260 put spread, selling the 275, 280 call spread. Here are the prices. So let's load that up to see what the payout diagram looks like at expiration. So you see we collected $2.90 for selling those vertical spreads. And if the stock ends up anywhere in this range between 265 and 265 and 275, then that's where we maximize our profits and we basically keep this credit that we've collected. Once it moves outside there, you could see the graph starts going down. These are our break-even points. And then at some point, if the stock just keeps going down, the good thing about the iron butterfly is that we're buying the wings, right? So we stop ourselves out on both sides. If it keeps going down, here we go, we stopped ourselves out. This is our maximum loss. If the stock keeps going up, we stopped ourselves out because we bought the wing to the upside, and this would be our maximum loss up here. And really what we want to do is sell them where there's a good chance that the stock will just sit in this range, and we're going to be able to collect that credit and profit from the credit that we received for selling that butterfly. Now, before I go to the scan, one thing, the reason you use a scan is, as you can see here, I just picked these strikes, but there's an endless amount of credit spreads that you could sell and strikes that you could pick, right? I just picked these two, but you could see how many strikes there are here. There are different expirations that you could set up in iron butterfly. There are also many different stocks. So by hand, it's really impossible to research which one is the best one. You'll never be able to do it, and that's why we rely on a screener or a scanner to help us out and narrow down the best possibilities or the best candidates. And here, when I go to the scan, before I go to the scan, the idea is this, that as you could see here, in this situation, we sold the 265 put, which is 1.9% away from the current stock price, and then we sold the 275 calls, which is 1.8% away. So basically, if there's a good chance that the stock just trades within that range, 1.8% up or down, then this could be a potentially very good trade for us. If historically, let's say, just trades in a 1% rate in a 20-day period, it barely moves outside that range, then this potentially could be a good spread for us, unless we have good reason to believe that it's going to make some kind of an explosive move. So there are two things we're going to be looking for in a scan. Do you have a good chance that the stock will stay within that range, or we're going to look at historical historical percentage moves and compare it to today's prices. And we're also going to look at how frequently does it move out of here. Like how frequently does, in a 20-day period, does it move outside the 1.9%, 1.8% range. So let's go to our scanner here, and I'm going to go to we picked the Iron Condor here, and these are all the Iron Condors scanned for this month of December 20th, the current month. So I'm going to change it so you could see here there's 10,869 different Iron Condors, and they're right now I just have it sorted by the stock's market cap. So you see Apple's popping up, Google, there's a bunch of them right now. But let's even expand that and look for for any expiration that expires within the next 30 days. So you could see now I have 57,428 different Iron Condors to analyze in here. And so the first thing I want to do is narrow down based on the edge number and the historical win rate. And we've done this before. You could look at videos how this works, and the analysis is in here if you open it up. But the short version of it is that here's the Iron Butterfly December 20th. If you sell the 275, 285 call spread, if you sell the 267.5, 257.5 put spread, then here is your credit, $3.62. Based on historical moves, and right now we look at the last 4 years of historical moves in Apple, but let's change that right now to let's do 6 years. So now we're looking at 6 years of data, and we're looking at historical actual returns, and we're going to convert the actual returns, percentage returns, and create a theoretical value so we could compare that if you did the same Iron Condor with the strikes the same distance away percentage wise from the current spot price, and with the same amount of days to go. So this has 7 trading days to expiration. So it's looking historically for 7-day hold periods. These are the percentage returns, and it's calculating based on the percentage returns what this Iron Condor would be worth. And basically what this is saying is that today you get a credit of $3.11. We think the theoretical value is $2.84. So if you're selling it above the theoretical value, then you're receiving an edge. So this 4% is based off the difference between what you could sell it for, what it's worth, divided by your max loss, or what you have at risk, right? This 63.2% is telling you that's how frequently this Iron Butterfly would have been profitable if you did it at today's prices. So basically, if you did it at $3.11, historically, 63.2% of the time, you would be able to buy it for less. So you sold it for $3.11, you would be able to buy back for less and keep some profit. So let's do really quick scan, and we'll say that we want to narrow these down and we want to look for edge. So we always want a positive edge. So I'm going to scan for anything it has to have at least 5% edge or higher. So now we narrowed it down over here to 3,366. So you could see here in Alibaba, we have some that are 10%, 9%, and just in Alibaba alone. So besides the theoretical edge, maybe we want to also put a floor, how frequently, or what was the win rate, right? So you could have positive edge, and if you're okay with a low win rate, that's fine. Or if you're looking for something that had a higher frequency of wins, we could set that here. So I'm going to set that to at least 60%. So now this narrowed it down a little bit more. Now as we could see that Alibaba pops up a lot, then we get a little Visa, Johnson. So there's a lot going on here just in Alibaba alone. So now we're going to tell the machine, show me the best one per stock based on theoretical. So given all these other parameters I just set, show me the best one by theoretical edge per symbol. So now I set this filter, best theoretical edge by symbol. So you could see now for Alibaba, it's this one, January 10th. You sell this call spread, sell this put spread for 284. The theoretical edge is 9.6% with a almost 70% historical win rate. This one is for Visa, Johnson & Johnson, so you could see how fast we narrowed down per symbol for the best iron butterfly based on the parameters that we set. And of course, if you just have your own watch list, you could do buy stocks in your watch list. That could narrow it down even further. Or you could just keep narrowing it down because you have all these different parameters that allow you to keep narrowing it down. But you could see here now, you could really go in there and just decide which iron condor fits your risk parameters, and that's how quickly you could do it with a scanner. Thanks everyone for watching, and see you in the next video.